I say, there's a lot of rules that really help us out as business owners as far as conducting different things.
So what about the keeping track of the books, the accounting, the bookkeeping? Like, what do you recommend for an investor just starting out who doesn't have an abundance of properties, who can hire a CPA and has some expensive accounting software, just for the newbies getting started?
For the newbies getting started, the advice for newbies getting started is actually going to sound like the advice for everybody. But if you're just getting started, I don't think there's a need to jump into expensive software immediately. Eventually, as you're scaling up and you're trying to build your business and you got good momentum going, you're going to find yourself too busy to jot everything down. So you definitely want to put systems in place. Systems in place that we can put in right now would be keep your receipts and snap pictures of them. One easy way to keep everything up and to keep all your receipts together is to, if you snap a picture of them and then sort them through your system, through your phone, you'll always have that image there. And the IRS does accept photos of receipts as proof of those payments. One of the biggest things that we should do is to have separate business accounts. All right, make sure that all of your business income and expenses come out of that account, and the same thing for your personal. Intermingling those is called commingling, and that actually voids your whole incorporation. Like if you're an LLC and you're commingling, that commingling pierces that corporate veil to the point to where you might as well not even have it. All right, so you want to have separate accounts. I think that's vital. Even if your receipt keeping is sloppy, a lot of times you can even go back to your bank statements and have everything right there. All right, so that's vital.
So can I put personal income into the business account as long as I don't take it out of that business account for, like, using my personal income into that business account to pay for business expenses, but not utilizing it for anything else but business expenses?
That's a great question, which I'm going to talk about briefly now, paying yourself and putting money into the business. All right, so you have a business, you're trying to get the engine running on it good, it needs more capital. What you want to do is transfer money or write a check from yourself to the business and label it as owner's contribution. All right, so owner's contribution basically says that, hey, this money that is going into this account is not profit, it's cash infusement for investment purposes. So now when people look at your bank account and they see this cash infusion and say, hey, where's the tax on that money? That money is not taxed, that is investment into my business. Another thing that I think is probably more important than how you put money in is how you take money out. If you're an LLC, you're not required to set up payroll. But what I would advise is that you have a schedule to where every 2 weeks, maybe every 1st and 15th, you take out the same amount on a schedule if you can, all right? And when you do it, you can either transfer the money from yourself, from your business account to your personal account and label it as owner's draw, or write yourself a check and on the memo section, write owner's draw. And that's a good way to keep, a good system of your payments to yourself and your payments into the business.
And these should actually be done with physical checks? Because I don't know, like with the wire transaction, I don't know if you have the capability to.
Yeah, at least with mine, I use Wells Fargo, and every time I take a distribution for myself, I put in the memo section on the transfer, owner's draw. So now when I pull up my bank statements and I want to see what's revenue and what's not based on my bank statements, I have that code right there. Yeah. As far as ways to keep your books together as you go, I'm a big fan of systems. So every day I have a set number of things I do for my marketing, and I have a set number of things I do for my accounting. And for my accounting, I get all of my receipts together, I make sure they're saved, I look at any spending I've done, and I will reconcile it in QuickBooks. But if you don't have QuickBooks and you're just getting started, it's a very good idea to get an Excel spreadsheet and write down the purchase that you made, where you bought it from, the amount of it, and most importantly, not most importantly, but also very important, what property was it allocated towards, all right? And if it's not allocated towards a property, just put it as general, like a general business expense. But now you get all your receipts, you have them sorted by date, you have them sorted by time. If you've ever seen a Schedule C or 1120S form, those categorizations, you may want to categorize them like that, so when it comes tax time, you have everything already categorized. But have those different sections on Excel sheet, and every day, just spend about maybe 5 to 10 minutes, maybe less than that, and just knock it out. Just have that as part of your routine. You will be better than 80% of the market if you do that for yourself.
Do you suggest as you scale with separate properties that you have a business checking or business savings for each property, or is it okay to have one checking and one savings account and just lump all the profits and losses from that one account?
For me, it depends on style, really.
Okay.
It depends on style. It also depends on your business structure. Earlier we said if you have active income and you have passive income, you definitely want two separate entities, which means you'll have two separate accounts. But let's say you do a lot of fix and flipping activity. I would just have all of that go in and out of one account. Now, if I had somewhere I was partnering with others, I may set a separate account for that. But if it's just my own, I would have everything go through one account. Yeah. But there's all kind of crazy things you can do with accounts. I've seen some companies that have a wire account, a payroll account, a savings account, a tax account, and a couple of credit cards. Before you know it, you got a huge web of things you have to track, and it can become cumbersome. If you're doing that, you should probably get a bookkeeper. But even with a bookkeeper, there are going to be things that you need to do to make sure that the bookkeeper has information that they need. So the more you add on, the more complexity is involved. So what we don't want to do is add an unnecessary level of complexity. But if it helps you to understand your numbers better, then I would say go for it. Yeah.
So when you're doing like a syndicated deal or you have other people going in, does the payment or acquisition for a property, should that all come from one entity? Like, how does that work? Say if I have, money that I know is coming through my business account, and then one of the people that, is part of the deal is, coming straight out of pocket, does that have any kind of implications for me or?
Well, situations like that, if you're doing a syndication, you should have an accountant or a CPA, actually a CPA on your team that's reversing those transactions. More than likely, you're going to be a limited partnership. And of course, all this stuff's going to be in the same account. You would contribute it for a shared limited partnership. Of course, limited partners are going to have no management duties. They're just going to be strictly cash partners. But the managing partners, they're going to basically put all that money into the same account or the same set of accounts where they manage it. And of course, that would depend on the complexity of the syndication. That question is, can go a million different ways, but I can guarantee you they're going to do it in the most sensible and simplistic way possible, just to avoid unnecessary, entanglements.
That's some good stuff, man.
Yeah, really good.
Any other questions? There was something else I want to talk about. I cannot remember off the top of my head.
Do you recommend people just create their own Excel spreadsheet to keep track of the books to get started?
In the very beginning, when you're strapped for cash, it's a good idea to get used to keeping your own books. If you want to be really simplistic about it, you can use an Excel spreadsheet. We would use the date, where you spent the money, what it was spent on. You want to categorize it, like was it an advertising expense, was it office supplies, was it repair? You want to, I think I said dated already, but you also want to allocate that expense to a particular property if it's spent on a particular property as well. That way you can not only track it on expense type, but also by the class or the property. It just gives you much more information. Now, the power of QuickBooks and accounting software is that it's able to take all that information and combine it and then aggregate it in such a way that now you can generate useful reports that you can actually use to grow your business. Like, how much have I spent per property? How much have I spent per vendor? How much have I spent per category type? And now you get to look at, you can produce profit and loss statements and balance sheets and all kind of reports that will be very useful. To do that in Excel is hard. It's very, very time consuming. So initially you don't have much activity going on. Hell, you may not even be profitable yet. yeah, use Excel. You know, but once you got some momentum going and you can form it out to someone else, I would say do so, because most bookkeeping activity is going to be anywhere between what, 30 to maybe $100 an hour. But if you are doing work that's paying $200, $300, $400 an hour, what would you rather do, your books or make more money? You know, and also having a system like QuickBooks and having it up to date. It says something about the care you have in your business. If you have partners, right, or people you're looking to partner with you on a deal, and there's two investors, we'll split them up into twins. You know, they both have the same amount of transactions, same size transactions, same gusto about their business, but one has detailed books, one have not so detailed books. Which one you think the investor is going to be more likely to partner with? The one that can produce reports and show where his money is going, because you know where your money is going, you know? Which business owner you think is going to be the one that's going to be the most profitable? The one that can't track his stuff, or the one that has information available so he can see what plugs to stop up, you know? A good accounting system can serve like an alarm system. If you do it right, you know, if you can look at your numbers and tell all kind of useful stuff like, hey, if revenue doesn't increase in 3 months, I'm going to have to lay somebody out. I can act on that now. Verdicts come up on the 3 months like, oh my God, somebody's got to go, and now you're in crisis mode, you know? You know, or you can see where your main profit centers are, and you can put all your energy there. Or you can analyze where your main marketing dollars are the most effective and put all your marketing there, you know? Or, I mean, it's...
That's a commandment.
So many things, yeah.
It's a commandment, know thy numbers.
Exactly. If you don't know your numbers, then it's like driving with a blindfold on with no map. Well, if you have a blindfold, you don't need a map. But but yeah, you want to start off just mainly doing good record keeping and knowing where your money's going. But eventually, you want to get a solid accounting system in place. The more money you make, the more complicated it's going to get. The more money you make, the more devastating the consequences for bad actions.
Right.
Thanks for watching the video. We appreciate your viewership. By the way, guys, make sure you subscribe to 100%finance.com. We have a plethora of tools that can help you succeed financially. We have a report on credit repair, 3 tips on how you can improve your FICO score. We also have a business credit ebook. We have a ton of real estate related documents, from deal analyzers to a mortgage calculator, a whole bunch of resources. You just have to subscribe. And one last thing, don't want to forget, we are offering free live webinars to answer your questions. This is only made available to our website subscribers. So you have to subscribe to 100%finance.com to receive the details as to the date, the time, and the call-in information for the webinars to answer your credit repair, business credit, or business funding needs, as well as your real estate related questions. Thank you guys again for watching, and subscribe.